Here's something that'll keep you up tonight. In exactly 18 months, your financial life could look completely unrecognizable. Not because of some market crash or economic collapse, but because of shifts already in motion that most people aren't paying attention to. The scariest part? You probably think you're prepared. Let me show you what's actually coming. Right now, the average American has about $62,410 in their checking and savings accounts combined. Sounds decent until you realize that number includes billionaires. The median, what most people actually have, sits closer to $8,000. And over the next year and a half, that gap is about to become a chasm in ways that'll fundamentally change how money works in this country. Here's what nobody's connecting. Commercial real estate is collapsing in slow motion. Office buildings in major cities are sitting 30 to 40% empty. Those buildings secure massive loans at banks. When those loans default, and they will, it creates a cascade effect that doesn't hit headlines until it's already destroyed your savings. But that's just setup. The real shock comes from something way more personal. Your job is about to change in ways that have nothing to do with AI replacing you. Companies are quietly restructuring how they pay people, and it's already started. Base salaries are shrinking while variable compensation grows. What does that mean? Your steady $75,000 salary might become $50,000 base plus performance bonuses that may or may not materialize. This isn't speculation. It's happening right now at major corporations testing this model before rolling it out industry-wide. They're calling it alignment with business outcomes. Translation? Your income becomes unpredictable exactly when everything else is getting more expensive. Speaking of expensive, let's talk about something you're probably not tracking. Insurance costs are about to explode in ways that'll make recent inflation look tame. Home insurance in Florida has already tripled in some areas. Car insurance nationwide jumped 26% last year. Health insurance premiums are climbing faster than wages for the first time since 2011. These aren't small budget adjustments. For the average household, we're talking about an extra $500 to $800 monthly just on insurance within 18 months. That's $6,000 to $10,000 annually that has to come from somewhere. Now combine unstable income with skyrocketing fixed costs. You see where this goes. Credit card debt just hit $1.13 trillion nationally. Average interest rates are hovering around 21%. Here's the math that should terrify you. If you're carrying the average balance of $6,500 and making minimum payments, you'll pay that off in 17 years while spending $9,000 in interest alone. But wait, because it gets worse. The federal student loan payment pause is over. Those payments are back, hitting budgets that adjusted to life without them. We're talking about 43 million borrowers suddenly losing $200 to $400 monthly in cash flow. That's $100 billion annually sucked out of the economy, out of households that were barely managing before. And nobody's talking about what happens when all these pressures converge simultaneously. Variable income plus rising insurance plus resumed student loans plus credit card debt at 21% interest. The math doesn't work. It can't work. But here's the twist that changes everything. And this is where most people's understanding completely falls apart. The government's response won't be what you expect. They can't raise interest rates without triggering massive defaults. They can't lower them without reigniting inflation. They're trapped. Which means you are too, unless you understand what's actually happening beneath all this noise. Most financial advice right now is dangerously outdated. Save 6 months' expenses. Invest in index funds. Buy the dip. That playbook assumes stability that no longer exists. When your income becomes variable, when your fixed costs are exploding, when the systems designed to protect you are themselves unstable. Traditional advice becomes a liability. Here's what changes everything. The people who survive what's coming aren't the ones with the highest incomes or the most aggressive investment strategies. They're the ones who understand that liquidity is about to become more valuable than returns. Cash sitting in a high-yield savings account earning 4% looks boring compared to stocks. Until everything breaks and you're the only person in your circle who can actually access money without selling assets at a loss or maxing out credit cards. The wealth transfer that's about to happen isn't rich to poor or poor to rich. It's from the overleveraged to the liquid, from people who optimized for looking successful to people who optimized for surviving chaos. That expensive car lease, that maxed out mortgage, that perfectly balanced portfolio, all of it assumes tomorrow looks like today. It won't. Banks are already tightening lending standards. Credit card limits are being quietly reduced. Home equity lines of credit are being frozen. The easy money era is ending, and when it fully closes, millions of people will discover they built their entire lives on credit they can no longer access. But there's a darker layer most people haven't considered. What happens to social dynamics when half your peer group can't maintain their lifestyle anymore? When the couple with the perfect Instagram life suddenly can't make their mortgage? When your coworker driving the luxury SUV starts taking Uber because they can't afford gas? The social pressure that drove so much of this consumption is about to reverse violently. We're heading into a period where financial honesty becomes survival strategy. The people still pretending everything's fine while drowning in debt will go under first. The ones who adapt, who cut expenses before they're forced to, who build actual reserves instead of maintaining appearances, they'll navigate what's coming. This isn't about predicting exact timelines or specific crashes. It's about recognizing that the foundation everyone built on is fundamentally unstable. The lifestyle you see around you, the one that never quite made mathematical sense, is about to be stress tested in ways it cannot survive. The question isn't whether it breaks. The question is whether you'll be positioned to handle it when it does. The next 18 months will separate those who saw this coming from those who believed the illusion could last forever. You can't stop what's already in motion, but you can choose which side of the divide you end up on. Start building liquidity now, because when everyone else realizes they need it, it'll already be too late.